Exercise 19-23. We're going to record the completion and sale of manufactured goods. So June production generated the following activity in Axle Chassis Company's work in process inventory account. So this box represents the information in the work in process inventory account. Remember, this is the inventory that is being built. In this case, looks like we build axles. Additionally, Axle has completed jobs 142 and 143 with a total cost of $48,000 and $40,000 respectively. So job 142 was $48,000, 143 cost $40,000. Requirement 1. Prepare the journal entry for production completed in June. So here's the jobs completed in June, 142 and 143. Prepare a single journal entry for this event. Record debits before credits, and then select an explanation. So jobs 142 and 143 were in the work in process, but because it says these jobs have been completed, they're going to leave work in process. So we have to lower the WIP account, work in process. And where do they go to? They go to the finished goods account. So finished goods is going to be the debit. It's going to increase. So finished goods inventory is going to increase by $48,000 and $40,000. So that's $88,000. Copy and paste. And then they're leaving the WIP account. So the WIP account, work in process, is declining with a credit. Work in process inventory. And the explanation is completed jobs, costs assigned to finished goods. So we're just taking it from WIP, work in process, and putting it in finished goods. Requirement 2, a T account. So this is a T account, debits, credits. A T account for a work in process inventory has been opened for you. Enter the beginning balance as BEG-BAL, beginning balance, on the first line of the T account. So here's our beginning balance. Post the June activity, including the journal entry made in requirement 1, which is up here. Using the, let's see here. Post the June activity, including the journal entry made in requirement 1, using the appropriate descriptions as posting references. Compute the ending balance, BAL, in the work in process inventory account on June 30 for the end of the month. So abbreviations, MOH stands for manufacturing overhead. So the beginning balance is right here, June 1 beginning balance. I'm going to copy and paste that, 26,000. So that kind of represents over here this $300 from our slides. Remember, we had this $300 that was already in job 69. That was a job that was already in process. Then we started this job 70, so we added some wood. 200 and the 100 was wood. And then we added some manufacturing overhead was the 50 bucks and the $75, and I believe the $25 were direct labor. So that's what we are recreating over here. So the direct materials used is 38,000, so that increased the work in process inventory account. Direct materials used, not purchased. Purchased would have been over here in raw materials. And then we have direct labor assigned to cost, so similar to the when we assign direct labor to the guitar job. We have $42,000. That increased our work in process. Direct labor assigned to jobs. And then we've got manufacturing overhead allocated to jobs. So hopefully, as you remember, we took $50 of manufacturing overhead out of the manufacturing overhead account and we applied it to this job 70. So now we're doing the same thing, but this time it's just a larger amount. So 25,200. And that's MOH, manufacturing overhead allocated to jobs. And then don't forget, it says post the June activity, including the journal entry made in requirement 1. So up here in the journal requirement 1, we had 2 accounts being affected. Finished goods went up, work in process went down. So what account is this? This is work in process. So we have to find the work in process here, and it went down by $88,000 for the 2 jobs that were completed and moved out. So let's see here, jobs 142 and 143. Normally I would put it up here, but they only have the beginning balance. So apparently they want us to put it down here. All right, so we had a beginning balance. We used some direct materials. We had some people working on it, and we allocated some overhead. And then at the end of the period, or sometime during the period, we transferred jobs that were finished out of the work in process, because this account is only for jobs that are still being worked on. So we're going to figure out the balance, and we're going to take 26,000 plus 38,000 plus 42,000 plus 25,200 minus 88,000, and that gives us an ending balance of 43,200. Why are we adding these? Because remember, work in process is an inventory account, which is an asset. They increase on the left side. Requirement 3, prepare the journal entry to record the sale on account of job 143. So this job 143, which cost us $40,000, we sold it for $63,000. Cha-ching! Also prepare the journal entry to record cost of goods sold. So prepare a single journal entry for this event. Select the explanation on the last line. So begin by preparing the entry to record the sale on account. So because the sale was on account, are we getting cash or are we getting AR? We're getting accounts receivable. How much? $63,000 worth. So copy and paste that. And whenever we make a sale of a product, we have to increase our sales revenue account. And now notice it says, do not record the cost of the sale with this entry. That'll be in the next step. So we need an explanation, sold jobs on account. And almost done. Now prepare the journal entry to record cost of goods sold. So for this job 143, how much did it cost? Well, it tells you up here. The 142 and 143 cost 48 and then 40,000 respectively. So 143 was 40,000. So that's how much it cost us. Because remember, that's how much we took out of work in process and put in finished goods. And then when we sell it, we're going to take it out of finished goods and it's going to go into cost of goods sold. So I'm going to put 40,000 here. Again, I get that from up here. Copy and paste. So what's happening is we have to recreate this. Remember this guitar that was finished or actually sold? So we had to take its cost, remove it from finished goods, and put it in COGS. So COGS increases with a debit. So this first line, which is a debit, that's cost of goods sold. And where did we take the, in this case, axle? Where did we take these axles from? The finished goods account. So that account is going down. So finished goods goes down. And then the explanation is sold jobs, costs assigned to COGS. And then they're asking us, how much was the gross profit for job 143? So remember, this is job 143 right here. So our sales, well, first of all, what's the formula for gross profit? It's sales revenue minus COGS. So revenue minus that expense. So it looks like $23,000. So how do you like that gross profit? Something cost you $40,000 and you sold it for $63,000. Not bad. So that's it.